Hi, this is Tony Sagami. I want to talk to you about computers this week. Tell me, what country do you think is the #1 market in the world for computers? If you said the United States, you'd be right. But number 2 is what I want to talk about to you today. Number 2, with a 20% market share of the global computer market, is China. That's right, it's number 2. And according to a guy named Steve Balmer of Microsoft, who should know a thing or two about computers, he says that China is poised to become the #1 computer market in the world by 2011. So that should tell you that there's some opportunity across the Pacific Ocean if you're a computer investor. Now here's an interesting factoid. Microsoft, even though China is 20% of the global computer market, only gets 1% of its software sales from China. And so what's the big discrepancy between the revenues and the market share? The answer is pretty simple. It's software piracy. If you go travel through Asia, it really doesn't matter where you go, you'll find street vendors selling software titles, DVD movies, you name it. And so intellectual property protection is a big deal in China. In fact, Balmer says that intellectual property protection in China is not just lower than other places, it's very low, very, very low, which means it's almost non-existent. But it's just not the computer software industry has problems. Other American industries are frustrated by it. There's the American movie industry and also pharmaceutical companies. You can buy generic, non-patent protected drugs in Asia for a fraction of what you pay in the U.S. But nonetheless, there is a big opportunity hidden in that big Chinese market over there. And what's the best way to play that Chinese market? I would say with Lenovo. That's the Chinese computer giant. You might remember them. They're the ones that bought IBM IBM's computer division back in 2005. Lenovo is a rapidly growing company. They just reported their first quarter earnings, and they're pretty impressive. Their sales increased by 56% to $4.3 billion just in 90 days. Now, that's 56% impressive, but as Chinese sales grew by 67%, this emerging market sales to Brazil and India, for example, were up by 97%. So Lenovo is the computer company. If you own any PC companies, U.S.A, Dell, you're making a big mistake. Lenovo is the one you want to own. There's also a few catalysts that just happened. Lenovo just released its first smartphone. It's going to be a very direct competitor to RIM's BlackBerry and the Apple iPhone. It's a very sexy product, very popular, and I think it's going to take off. They also are about to release their own version of the Apple iPad, a little personal internet-connected device that could be very, very popular. So it has the product lineup to boost its sales even more. Now, Lenovo is available on the U.S. market. And get this, it's only 60 cents a share. And so you could buy 1,000 shares for a measly $600. So that's certainly an opportunity. Now, if you wanted to invest in Lenovo, the ticker symbol for that is available on the Hong Kong market, which is probably the best place to buy it. The Hong Kong ticker is 0992.HK. 0992.HK. If you want to buy it on the U.S. over-the-counter market, Pink Sheets, the ticker is LNVGF.PK. That's LNVGF.PK. Now, I'm not saying you should run out and buy Lenovo today. I would wait for it to get a little cheaper before I jumped in. But if you want to have a computer company in your portfolio, there's no question in my mind that Lenovo is the premier company to own. Until next week, this is Tony Sagami signing off.